Welcome to our 5 St Andrews Hill Business Crime webinar this evening with the hopefully enigmatic title of Carbon Credit Fraud, the Final Word, ? And thank you for joining us in what we all think is a really interesting, pivotal moment for concerns about climate change and green energy, carbon offsetting, and things like that with COP26. And at the moment, you simply cannot avoid hearing talk about climate change. COP26 has been everywhere in the media. And to give a flavour of the sometimes carbon hype that we hear, our own dear leader, Boris Johnson, said that if we don't tackle the dangers of climate change, it will be like the end of the Roman Empire. So no hype there from Boris Johnson. Let's not consider things that he said in earlier years about climate change. But as all of us who are involved in financial crime or on both sides are aware, wherever there is a lot of concern about an issue, a lot of talk or hype about an issue, there are also opportunities for fraud. And this webinar looks ahead, looks to the futures and considers what are the risks of fraud in the carbon markets and how can these risks be mitigated. And before introducing our first panelist this evening, who'll be Danielle Barden, let me say just a couple of words about the format this evening and also about the context. The context is that all of us who are on this panel this evening were brought together by the criminal case of Operation Toll, and that concerned the fraudulent trading in carbon credits and also laundering of the proceeds to the tune of about £36 million. That resulted in a trial that took place earlier this year at the court in Prospero House near Southwark. Now that case concerned the fraudulent selling of carbon credits to individuals who were all told that they were a good investment opportunity. But in reality, the credits were sold at huge markups and in circumstances where the investors never stood any chance of making any profit. Now that activity was between 2010 and 2015 that took place, what you might call the first wave of carbon credit fraud. And that case had a successful conclusion, but this talk this evening is not really so much about that first wave of carbon credit, but looks to the future, considers the incredible focus at the moment on climate change, and looks at what the second wave of carbon credit fraud might be like and what the dangers are. And so the format for this evening is, first of all, we have Danielle Barden, who is a very busy fraud and extradition practitioner within Chambers, who was also an outstanding disclosure junior in the Optol case. And Danielle will start things off by looking at the challenges for lawyers in these kind of cases, whether criminal or civil, into these kind of investigations and cases, looking at things from both sides. After that, we have Lewis Redshaw from Redshaw Advisors, who is an expert in the carbon markets with a huge amount of expertise and experience in those markets, someone who has spent a lot of time in Glasgow recently for some reason. And I'll be exploring with Lewis some of the concerns about risks of fraud in the carbon markets, and also the dangers that these kinds of frauds can pose to the confidence in the carbon markets, and looking at whether there's a need for an evolution of thinking about risks of fraud within the markets. And then lastly, and certainly not least, we will hear from Andrew Evans, who is to my right, who was my junior in the Optol case. And I say junior, but those of you who know Andrew Evans will know that he's a vastly experienced and hugely talented lawyer in financial crime. And with Andrew, we'll explore the issues in particular in relation to payment systems used for these kind of frauds and whether they represent something of an evolution of traditional investment type fraud. And we also hope that at the end there'll be some time for some questions and answers from people who are attending this webinar. So without any further ado, let me hand over to Danielle Barden, who will talk about the challenges for lawyers from these kind of cases and investigations.
Thanks, everyone. Yes, I am going to deal with, quite briefly at the outset, the challenges that I think are important and defence in cases relating to carbon credit, particularly with regard to frauds with carbon credit. Firstly, obviously, you'll hear in a lot greater detail exactly what a carbon credit in the carbon market is from Lewis. So with regard to that, safe to say that to make a little bit of sense of what I'm about to say, a carbon credit is obviously a highly specialised commodity. It is, and what the market is, execute and defend in these types of cases. Therefore, a carbon credit represents carbon that's removed from the environment, such as the grubbing of trees. Involved in these projects that remove carbon can have this verified.
Danielle, I'm really sorry to stop you in your flow, but I just noticed that not hearing every word.
Yes, I just noted that too.
Perfectly clearly, but sorry, but do carry on. But I don't know if there's anything you can do at your end.
Unfortunately, there's nothing, because I've got the strongest Wi-Fi possible on my working today. I will speak a little slower, so the odd word missing is hopefully not as much of an issue. So as I was saying, projects that remove carbon can have this verified. So effectively, they have it confirmed that what they are doing is removing carbon from the environment at certain amounts. Somebody suggested perhaps muting at your end, whether that might assist with the cutting in and out, but if not, no problem at all. So effectively, the sale and purchase of these carbon credits is the market, the buying and selling of carbon credits. Therefore, understanding who's producing these credits, who's verified that they are genuinely carbon credits, where the credits are registered, what type of credits they are, for example, CERs and VERs, and that I'll go on to that later, the market price and those particular types of credits, or more generally, and of course, whether there's a lack thereof of market prices, are essential elements to being able to understand the case and mean that actually they're very challenging cases to make others understand and to ensure that those who are both prosecuting and defending can make things clear in front of a jury, depending on what they're trying to suggest. For example, a substantial issue in these cases can be proving or disproving that individuals in fact own carbon credits. So carbon credits are registered with carbon registries, but they tend to be registered in quite large chunks. So that can encompass numerous different individuals' carbon credits that have been each purchased potentially a small amount, and then they're put together. So each person's name doesn't necessarily feature in the bulk of credits that are registered together at a registry. Individuals who buy carbon credits are also not necessarily given specific codes for each particular carbon credit. Sometimes the information they're given is the name of the carbon credit project, the project number, but not necessarily the particular number for the particular credit. So it's very difficult to tell sometimes whether carbon credits do or do not exist, whether they're owned by the individuals or not owned by them, and it can be very difficult to verify this either way. It is essential, as a result, in cases of this type, to have solid expert evidence to explain exactly how all this works. So particularly jurors understand carbon credits being a commodity that many have heard of, but do not necessarily fully understand exactly what they are. Of course, they need to understand what the commodity is. That's the focus of the case, so they can recognise whether what is being done with them is or is not fraudulent. As a result, it's essential to have an expert who can explain that clearly to a jury, but can also deal with elements such as quality of credits, age, markups, things of that nature. And of course, as I said, the existence or non-existence of credits and a market for them. This, of course, in combination with the use of experts, the use of graphics can be incredibly helpful during a trial. A combination of graphics that make things clear, make carbon credits understandable, how they move through markets and how they're purchased and sold, as well as, of course, as reiterating information. So giving a very clear explanation for the prosecution side in terms of opening, for both sides in terms of going through detail with experts during the course of the trial, and of course, repeating in closing to make sure the jury fully understand what it is that they're considering. A lot of the evidence is going to be cloud-based or digital in these cases, because of course, carbon credits aren't a thing that you can see. It's all very digitally based. So it means that there's unfortunately substantial trawling through digital material to find information that's relevant, that's helpful, that's unhelpful. In fact, being able to access the cloud itself may be difficult in the first place, given they're often kept far away and not accessible with basic checks. But use of any digital material that can be found, whether it's computers, whether it is access to a cloud service that the company is using, making sure there's careful use of keywords, cooperation, of course, at all times between the prosecution and defence to make sure those keywords are chosen early and are utilised properly, both in terms of disclosure and in terms of looking for prosecution evidence. For the same reason, the fact that the nature of carbon credits is likely to be substantial digital material that needs to be looked at in terms of disclosure. It is very challenging to keep on top of disclosure in these types of cases, ensuring reasonable lines of inquiry are properly followed up, requesting disclosure as defence from very lengthy schedules or potentially sub-schedules of material that are taken from digital material. There's also difficulties in disclosure with regard to the fact that often there are other companies, individuals who are in carbon credits have worked for before, therefore there may have been previous investigations, previous prosecutions, there may have been failed prosecutions, there are a number of angles that need to be looked at by both sides. And also, as a result, there tends to be substantial third-party material because of other bodies who've done investigations already. Another issue, I'm afraid I'm just putting issues forward here, but that is my part of this, is that many of the companies selling the carbon credits or broker companies that are selling on from those companies aren't based in the UK. This means that investigating supply chains, source prices, there have to be potential use of international letters of request, mutual legal assistance, things of that nature. And obviously that's become a lot more difficult with certain countries since we left the EU. International letters of request are known to take potentially months. So as a prosecution body, making sure those are put in a very early stage as soon as it's realised are needed is essential. Of course, this also presents substantial difficulties for the defence, who don't have the same channels available as the prosecution bodies, but do need to access potentially information to prove that there hasn't been, for example, substantial markups with the supply price. Another key issue that needs to be considered early on by the defence. With regard to media, there have been, of course, successful carbon credit prosecutions, such as that Kevin and Andrew were involved in, of course, Lewis and myself. People, as a result, are becoming aware of a lack of market for individual investors when they're investing into credits as a mid to long-term investment. But there is, of course, following COP26 and the general climate crisis, a real hype around reducing carbon footprints, and carbon credits is a potential way of doing that. Therefore, buying and selling of carbon credits may become more popular than ever. It leaves the door open to proper use of a potential market, but also, of course, improper use. And this needs to be considered when both prosecuting and defending cases of this type. Finally, from me, one last point is that it needs to be clear whether really it's a fraud going on, or potentially it could simply be sales hype, and actually it's not fraudulent, but it's a level of upselling that might be acceptable, not found to be fraudulent. As the market develops and alters over time, it may be even more difficult to establish whether companies acting as brokers for carbon credits are acting in a fraudulent manner, or whether they really are selling at prices that are quite realistic. That, of course, will always depend on demand and supply and things of that nature. And of course, it needs to consider whether there is a mechanism to sell those credits on. It does take, in these types of cases, a great deal of consideration and analysis, both to prosecute and defend these cases, and to make sure it's clear to the jury exactly whether there has been a fraud if you're prosecuting, or whether there hasn't been one if you're defending. And as I would reiterate the final point, having an expert who knows exactly what they're talking about makes a massive difference to the team as a whole, being able to discuss the issues, making sure that you're fully up to speed with it, and therefore able to present this clearly to a jury who may have never heard of a carbon credit before. That's all from me. Thanks, Kevin.
Danielle, as always, you've put matters beautifully, succinctly, and already conveyed a lot there in 10 minutes. And Danielle, I know that you can't stay throughout the whole of the webinar because you've got another event to go to, but we hope there might be some questions following on from some of those things a bit later on. Danielle, thank you very much for starting it off in that way. And Lewis, I wonder if I can turn to you now and see if I can ask you some questions about things to explore these issues. And first of all, I wonder if you could say a bit about your area of expertise. And we can see just about behind you, we can see it says Redshaw Advisors. So I wonder if you could tell us a bit about your expertise, and also what do Redshaw Advisors do?
Certainly, yes. I started life in the carbon markets back in 2004. I worked for Barclays Capital, and I joined to start and run their environmental markets business. But that environmental markets business was largely focused on the EU emissions trading scheme. But we also had a role to play in the clean development mechanism, where we transacted CERs, and the VER side of things was very much not an activity that banks were particularly interested in back in those days. That has actually changed now, but we had relatively little activity within the VER, the voluntary market, and I left Barclays at the end of 2013 and set up Redshaw Advisors in 2014. And what we do is we help companies understand carbon markets to help them be effective within them. And the original mainstay of our business was helping companies across Europe and the UK to understand their exposure to carbon markets via the EU emissions trading scheme, and latterly now the UK emissions trading scheme. And that involves a little bit of crystal ball gazing, a bit of rule interpretation, and also assisting with the procurement of carbon credits. And in the last couple of years in particular, the offsetting side of our activities has picked up. And so we're finding companies that want the rather opaque world of the voluntary carbon markets explained to them in a similar way to how we've been explaining and helping companies understand their financial exposure, their risk in the compliance carbon markets.
Louis, thank you for introducing it that way. I'm going to come on and ask you a couple of questions in a minute about, we've heard references to voluntary carbon and VERs and CERs. I'll ask you a bit about that to help us understand all of that a bit. But first of all, I have to ask you, how has COP26 been? Have you been up in Glasgow, and what's it been like?
Yes, I was up there for a week, Wednesday to Wednesday, and normally COP runs for 2 weeks, from I think it's the Sunday to the Friday, and it was extremely busy. Actually, there were a lot of attendees despite the COVID risks. The COPs have tended to be not very assistive for compliance carbon markets, and compliance carbon markets, such as the EU emissions trading scheme, have historically been the main game in town. But the interest in international carbon trading has picked up because there was an expectation from COP that we would have some rules of the game for international carbon trading, and that got people excited. There are a lot of, you can't exhibit as such at COP. You can only attend via NGOs, but those NGOs were somewhat inundated with requests for delegates to be able to attend in person. And there are a lot of side events too, outside of the main conference venue, in hotels around Glasgow, where companies were trying to demonstrate their credentials in this space. It was vibrant, certainly.
And in Glasgow, I'm sure the social side of it was quite lively as well. But Lewis, I have to ask. So, as someone who's involved in carbon markets, COP26, the outcome of it all, are you on the sort of sceptical Greta Thunberg side of things that think it's a bit of a cop out, or are you ultimately quite optimistic about things that were decided there? Sorry, it's a big question, I know, but
so I'm generally skeptical about COPs because trying to get unanimous decision making from 180 plus countries is pretty tricky, and the communiques tend to be watered down versions of what everyone hopes for, and that's been the case for 27 years now. But there's a clear statement of intent, even if it's not set out how the end game is going to be delivered. So the COPs are moving the debate forward painfully slowly. Solutions are few and far between. Greta is not a fan of carbon markets. We discovered, in particular at COP, she interviewed. I think she stormed out of a meeting that was discussing them, and I think that view is completely misguided. I mean, capitalism got us into this situation in the first place, and only a capitalist mechanism such as putting a price on carbon is going to get us out. It's all very well asking people to wear hair shirts, but actually a stick and a carrot are essential elements of how we're going to get to the solution.
And that's a really big topic, and if we had hours, we could probably develop that. But I wonder if we could just go back to a couple of basic things, again, to put our discussion into context. I'm quite conscious that there'll be people in our audience who will be in the carbon markets and will know all about these things, and some also not so much. So I wonder if you could, before we talk about the risks of fraud, just help us with a couple of really simple things. And I'm sure, I know you've explained these things many times before, but first, two questions. First of all, what are carbon credits, and what is carbon offsetting?
It's not an easy question to answer quickly, but I'll try. So essentially, there's two types of carbon credits. We can have carbon credits in a cap and trade scheme, and the EU emissions trading scheme is an example of that. And in such a scheme, the number of carbon credits is finite, and over time they reduce. And those are given out or auctioned by governments, and the governments mint those carbon credits, if you like. They create those carbon credits. And then there's the concept of carbon reductions that take place outside of regulatory regimes or regulated regimes. So the clean development mechanism and the voluntary carbon standards are examples of that. And if a project is able to demonstrate that emissions are being reduced beyond business as usual, then that project, and it's not part of an existing regulated regime, then that project can apply to Vera, or Vera, one of the organizations that will check the credentials of a project and check that emissions reductions have actually taken place, and issue carbon credits against those projects. The Gold Standard is another example of such a body, and both non-profit organisations designed to be the gatekeeper, if you like, the credibility behind the voluntary side of the market.
Lewis, in the voluntary side of the market, then you have various environmental projects that are able to demonstrate that they have reduced or avoided some carbon emission. Is that basically right?
Yes, that's the basic concept. And now those carbon credits are not generally, and in fact very, very rarely, those carbon credits are not to be used in the compliance, the regulated markets. The only market for such carbon credits is in what we call the voluntary carbon market. So that's companies that want to offset their carbon footprints by buying and retiring carbon credits, and the main currency within that market are VERs, verified emission reductions, and VERs can be issued by. There's a number of bodies that issue VERs, but the main one is Vera, and the second, the runner-up, is the Gold Standard.
So, if you have environmental projects that are able to demonstrate that they've reduced or avoided some carbon emission, are they then able to issue carbon credits through a registry to the same amount of the emissions that they've avoided? So if you have a project, an environmental project that can demonstrate that it's saved 1 million tons of carbon being put into the atmosphere, can that project then issue 1 million carbon credits? Yes. That can then be purchased by a company or something like that?
Yes, that's right. And so one carbon credit is the equivalent of 1 ton of CO2 emissions avoided or indeed removed from the atmosphere and stored permanently somewhere.
And then so the next part of it is, and we hear about this a lot in the media, especially recently, about companies going net zero. So what then is carbon offsetting in terms of, and what is going net zero?
Right. So well, we must distinguish between carbon neutrality and net zero. Carbon neutrality is where a company makes a claim that they have offset their carbon footprint by buying and retiring carbon credits of any kind, actually. But as I say, the most popular and the main event is carbon credits from Vera and from Gold Standard. Net zero relates to claims that companies may make about their carbon footprints again. But we have to consider what happens in 2050. In 2050, there can be no projects that avoid carbon emissions. There can only be projects. So when we hit net zero as an entire economy, there can't be projects that avoid emissions. There can only be an issuing carbon credits to allow someone else to produce emissions. There can only be projects that suck CO2 out of the atmosphere and lock it away permanently or semi-permanently. So the proper definition of net zero is the complete offsetting of your remaining carbon emissions with long-lived carbon capture and storage solutions. So carbon neutrality has been the game in town for the last 15 or so years. Net zero is a relatively new concept that requires a different kind of carbon removal as opposed to an offset, although they're all universally called carbon credits, carbon offsets, you name it. So it does get a little bit complicated.
So in simple terms, does it work in this way then, that you have environmental projects that issue carbon credits, those then go onto a registry, and then if there's a company, IBM or whoever, whose carbon footprint is, say, 1 million tons of carbon per year, that company can then purchase 1 million carbon credits, and they can say that they've offset their carbon emissions.
Yes, that's the idea. And by having a publicly accessible registry, it's possible, although not always done this way, and that's not a good thing, but it's possible to then demonstrate to any stakeholder, to the general public, that specific carbon credits have been retired permanently in the name of, in your example, IBM. And that public registry is very important because it allows scrutiny of the carbon offsetting claim, but it also allows scrutiny of the carbon project, and it makes sure, or at least helps make sure, that a given carbon project doesn't apply to both Vera and the gold standard and another standard, try to get multiple issuances.
Indeed, and I was going to come on to that. So following through the life cycle of a carbon credit, as it were. So if a company then purchases a certain amount of carbon credits, is the idea then that those carbon credits will then be retired, in other words, or cancelled on the registry?
Yes, that's the objective. And if it's done, if it's open to public scrutiny, then of course that helps the credibility in an unregulated system such as the voluntary carbon market.
And so then in terms of fraud risks, we've seen the projects at one end, companies in the middle, and then we have the retirement at the end. And so with all of that in mind, I wonder if I can ask you a couple of questions, going back to what you might call the first wave of carbon credit fraud. So I'm thinking about 2010, 2015. One of the issues that was identified then was that there was very little price transparency in the market. And so it was very hard for people to tell whether or not they were being sold carbon credits at a good price, or whether they were being, for want of a better word, ripped off. And that was something that was played upon by fraudsters at that time. Now, is that still an issue, or have things developed? Is that still a risk?
Yes, so one of the problems with the voluntary carbon markets is that they have been historically dramatically oversupplied, and so you have and there's no regulated need for these carbon credits. So it really very much depends on companies making what is essentially a charitable contribution to the environment. So they're buying carbon credits and making themselves carbon neutral. They do that for marketing purposes and for other reasons. So with this not obvious demand and a lot of projects that want to get off the ground and produce carbon credits, we found ourselves in a situation where there was oversupply. And with that oversupply, there was competition amongst the selling side of carbon credits, and those sellers would happily extol the virtues of their carbon credits and perhaps do down the virtues of other carbon credits. And so we've got ourselves in a situation where there was no single accepted standard carbon offset. And that caused price discovery to be extremely difficult, because if one person was saying this is a good carbon credit and that one isn't, you create an element of distrust in the market, and actually that doesn't help demand at all. We end up in a situation where you could have, I wrote an article recently, I said if you have 1,000 carbon projects, you could have 2,000 prices for those carbon projects, because things like vintage come into play. When you have an oversupplied market, sellers will do whatever they can to persuade buyers that their carbon credit is the one that you should buy. And so we have an awkward situation with price discovery, and that is starting to be resolved. There isn't a single resolution to that problem. One of the reasons it's starting to be resolved is actually this year in particular, demand has picked up, quite probably because of the build up to COP26. But in general, there is a focus on trying to make the voluntary carbon markets more credible. There have been a number of exercises to do that. Mark Carney being the perhaps more the better known advocate of such a process. And we have seen demand pick up, not so much from corporates offsetting their carbon footprints actually. And there's been more interest from investors as certain standards for carbon credits, voluntary carbon credits, have emerged. For example, the aviation sector has determined that they will take a certain type of carbon credit, and that's allowed the market to rally around a definition of carbon credits that all fit the same mold. So we've seen quite a rally in price in relation to those.
So is there a bit more clarity now than there had been then?
Yeah, so in the case of the aviation standard that was put forward by ICAO, you can now trade voluntary carbon credits for the first time on a recognized investment exchange. And that's not been done before. And of course, that kind of transparency of price, because recognized investment exchanges publish their closing prices, that transparency around prices has certainly opened the door for more transparency in the market in general. It's fair to say that it's a very narrow subset of carbon credits that qualify, and so it doesn't necessarily apply to all of them, but we're moving in the direction of travel is for more transparency and more standardization at the moment.
And you mentioned confidence a bit earlier on, and confidence in the carbon markets. And going back to the original wave of carbon credit fraud, when there was this big wave of fraud back then, did that affect confidence in the markets, and how negative can it be if you have fraud in the carbon markets?
Yeah, so I mentioned oversupply and under demand, and if everyone, as an example, if I wanted to fly on holiday and I felt guilty about the carbon emissions and I wanted to buy a carbon offset to compensate for that, as a professional in this business, it's not clear to me exactly which carbon credit I would buy. I'd have a bit of a tussle between price and quality. And so imagine the difficulty of the general public or of corporates or SMEs trying to decide what carbon credit to buy. So with all the confusion and sometimes the opacity that exists around voluntary carbon markets up till now, it's difficult to be confident that you're buying the right thing. So, of course, if then fraud becomes a headline within a sector, then it only undermines the decision-making, the efficient decision-making of consumers. And so, if I was as a professional in the market, I can think of a few carbon credits that I would buy, and I'd know where to go and buy them. Not knowing what's a reliable place to buy them, what's a reliable carbon credit, and even that the carbon credit exists or that it is even retired in your name, not knowing that, because there's no regulation around this particular market, not knowing that undermines confidence. And then, of course, the fraud just reinforces that, or the evidence of fraud and the headlines in relation to fraud completely reinforces that. And it's one of the factors that has caused demand in this particular market to be much less than supply overall, and it stops the market taking off.
Sorry to interrupt. I'm conscious that there's a lot to get through, and yes. Coming on to specific risks of fraud, really, in the market and what they are. First of all, starting off with the projects that are issuing carbon credits. Now, are there sometimes concerns about whether projects are genuinely issuing carbon credits, and also whether the carbon credits that are being issued relate to genuine carbon emissions reductions?
It's difficult to be conclusive. I mean, if there's someone trying to sell something that doesn't exist, and I'm not necessarily going to know about it, but I'd say in the main, the issuance process is fairly robust. It's been tested over many years now. It's been attacked by newspapers and by NGOs, left, right, and centre, and yeah, they have been found wanting on occasion. The intentions are good. I mean, the gold standard was actually set up by the World Wildlife Fund. It's not; they are not associated any longer, but that's where it came from. So the governance of those organisations is pretty strong. Now, there is the potential that another organisation could set themselves up as a carbon credit issuer, but it's at this point in time, I'd say it's quite difficult for them to do that, especially fraudulently, shall we say. They might let in projects a little more easily than others, but because the main issuers are non-profit organisations. I like to think that buyers, both corporates and general public, would see through a company that was for profit when it's compared to one that is not for profit. When it comes to the projects themselves, there's always the incentive, because these carbon credits have a value. Historically, that's been very low, but if you had 1 million carbon credits and they're worth $1, then they're worth $1 million. If you can get 2 million carbon credits, well, that's another $1 million. So the incentive is always out there to over-egg what a project is producing in terms of emissions reductions. The governance, of course, is key.
Sorry, only kind of got a whole bag of things I want to ask you about, and I'm conscious we won't get time. But so is there sometimes a danger in relation to registries? Now, I think you mentioned one registry, Vera, a bit earlier on, and that's a registry that carbon credits can be issued onto. But could there also be a danger of there being bogus registries set up perhaps in different parts of the world that are said to be issuing carbon credits that actually really aren't?
So I think that what's perhaps so yes, I mean that there exists that danger in that a network of companies could be colluding with an organization to sell carbon offsets that don't exist, showing a path to what would appear to be a legitimate registry and issuing body. I think that risk will always exist. In particular, of course, in the voluntary carbon market, because there is no tangible asset at the end of the pipe. So it's that much easier, perhaps, to fool people by showing them what looks like a legitimate company with a fancier website with a lovely database attached to it.
And for instance, is it right that we know about Vera being a legitimate carbon credit registry, VERRA? Is it right that you were once contacted by an organisation called Vera, but with a 1R? That was something.
It wasn't a direct contact to me. It was through another. But yes, we have tripped over a presentation from an organisation called Vera with 1R, with a logo that looks a bit like, well, a lot like Vera's web logo, and indeed statistics relating to projects that would appear to be lifted from Vera's website. So yes, that is something to keep our eye on. And
you've already touched on something I was going to ask you about, which is the intangible nature of the assets and how they may be used for fraudulent purposes. So bearing in mind that if someone purchases a carbon credit, it's not something that exists other than as a permit or a serial number or something like that. How can there be confidence that people are really purchasing the thing that they believe they're purchasing, that they really are carbon credits, or that they haven't been sold more than once?
So there's a problem today with the main participants in the carbon market. Cheers, Danielle. In that the major retailers in the main don't show the carbon credits that they are retiring in either their name or their customer's name in the public domain. So unless you've got a stakeholder inquirable public database, it's very difficult to know, firstly, what claim any company has made, and secondly, whether a retirement has even taken place at all. Now, I won't for a moment suggest that the mainstream carbon offset retailers are not retiring carbon credits on behalf of their clients, but by sustaining an opaque mechanism for verifying whether that's actually happened or not, it creates a fertile ground, if you like, for the not so honourable companies and organisations to say that they have offset, but because it's not common practice amongst the existing mainstream retailers to show a link between what is bought and what is retired that is publicly available, it makes it very difficult for the average consumer, whether that's a person or a corporate or a small corporate, to know what best practice is. So it's really important that this market ups its game in order to avoid that kind of issue. Because what can happen is, I could say to a company, we have offset on your behalf and here's a certificate. I could make the certificate. If the company doesn't know that what it really should do is check on the public register to see something's been retired, if they don't know that, they're not going to do it. And if I look like a credible company, which we do, and we don't commit any fraud, of course, if I look like a credible company, then why shouldn't the customer believe what I've sent them is true and has happened?
So there are risks in terms of whether carbon credits are actually being retired or only being retired once. And
correct.
And Lewis, is it also right that there are now new carbon credit related products that are perhaps even more intangible, like carbon credits that are linked to NFTs, non-fungible tokens, which is another big buzz
story
word at the moment. So
yes,
is that right? And we probably haven't got time to go into all the details, but are there such products now? And are they also risks there about whether they exist or not?
So there are NFT-based carbon credits out there for sale in various places. Some are very likely to be asset-backed with real carbon credits. Others may well not be. The biggest issue with the wave one of fraud, and indeed with NFTs now, is that unless there's plenty of companies willing to sell carbon credits, but you're open to fraudulent activity if that same company doesn't buy them back again at a price that's very similar to the one that they'd sell it at, because that implies there's either an excessive markup or indeed there's nothing underlying, no asset underlying the activity at all. So trust comes to the voluntary carbon markets when there is a two-way market. There's both a bid and an offer available to the buyer.
And Louis, a lot of things I won't get the chance to ask you about, I'm afraid. But one thing I did want to ask you about before giving way to Andrew Evans and any questions is, do you think there's a need for an evolution of consciousness within the carbon markets about fraud risks?
So I have spent a lot of time considering this particular problem. When we set up Redshaw Advisors, the inquiries we got inbound, when you start a new company, inbound inquiries are quite hard to come by. The inbound inquiries we got were almost exclusively from people that believed that they had bought carbon credits and that they wanted to find a way to try and get some of their money back. And that was a a very sad situation in some cases, and we still get those inquiries today, some 7 years later. Now, it's so awareness of the fraud, of course, would help reduce the fraud. It doesn't mean that we won't still get it, and the key to helping stamp out the fraud in this particular market is to increase the transparency of price, increase the transparency of retirements and ownership of carbon credits, and overall establishment of common rules and standards that will help people understand what it is that they're getting involved in, and the voluntary carbon market has been a fertile ground for criminal activity because it's so complex, and because actually the legitimate actors within it are not being as transparent as perhaps they should.
Lewis, thank you very much for that. I'm hoping I know already there are some questions for you, but if we can wait there for a moment, if I can bring in Andrew Evans. And Andrew, I want to ask you about a couple of really particular things from your experience in the case that we did, Operation Toll, and particularly in relation to the payment systems that were used, that operated there. And I wanted to ask you if there's anything in those payment systems that were sort of different or unusual compared to other boiler room investment type frauds.
Thank you, Kevin. Yes, well, with a standard boiler room fraud, potential investors will be instructed to transfer payment for the commodity in which they are supposedly investing directly to a bank account that's held in the name of or under the control of the boiler room operators. But in Operation Toll, a clearing and settlement system was devised whereby investors, instead of making payment direct to the boiler room itself, for which they were purchasing the BERs, they were instructed to make payment to a third-party bank account, which was held by a different company, which was authorised or regulated by the Financial Conduct Authority, the FCA, whereas the brokers themselves were not FCA regulated. And so the brokers would then receive their payment from the clearing company for the VERs which they'd sold, less a clearing fee and a small charge for the supply of the VERs that they were selling on. And so the advantage to the fraudsters in operating that type of clearing and settlement system was that it gave the selling of VERs as a vehicle for personal investment, for which they were wholly unsuited, the veneer of legitimacy. And so, in other words, it was a way of misleading investors into thinking that they would be receiving a form of protection for their investment, whereas in fact they were not. And so investors were reassured that they were making a sound investment because the monies they were paying wouldn't be going straight into the pockets of the brokers, but would be going to a regulated body and so would be protected. But in fact, that separation of selling the asset on the one hand and the system of clearing payment for the asset was a key element in the operation of the scam. And so the way the scam worked was that by telling customers that payments for their investments were being made to a regulated company, which was authorised by the FCA, brokers were able to mislead customers into thinking that the investments which they were purchasing would be FSA protected, whereas in fact they weren't, because VER carbon credits aren't a regulated commodity. And so selling VER carbon credits, whether for offsetting or for investment, isn't a regulated activity, and so is not governed by the provisions of the Financial Services and Markets Act 2000.
So individual investors were paying money for investments, thinking that they were being held by a safe, regulated entity, but in reality they weren't, as we saw. But what I wanted to ask you about, and again thinking about the future of investment type frauds, this mechanism by which there is a sort of underlying payment system that is being used, do you think that that's something that again we might see in the future? Is that a kind of investment fraud boiler room version 2?
Well, yes, I mean, potentially the implications for that type of payment system are very wide-ranging, because this was a sophisticated system. It was a step up from the standard system of boiler rooms using their own accounts and their own delivery systems, and it was devised with the potential for if you like, revolutionising investment fraud for a wide range of unregulated commodities, not just VER carbon credits, but precious metals, minerals, storage, and so forth. And so a company using that system could become, if you like, the Amazon or the eBay of investment fraud, offering a marketplace for different brokers misselling a wide range of different commodities.
So the case that we were involved in was focusing on activity 2010, 2015, but those kind of online marketplaces are more common now. So do you see that as being a route forward for investment fraud, these kind of online marketplaces?
I mean, going forward, yes, we could see a similar clearing system being used in the future to launder the proceeds of a second wave of carbon credit fraud or commodity-based investment fraud. But one or 2 points to make here. Firstly, the banks themselves play an important role in this, and as we saw in Operation Toll, over the period of that fraud, they became increasingly aware of the misuse of bank accounts for laundering the proceeds of fraudulent selling of VERs, and so that was why the FCA, a regulated company, kept having to shift the account it used for clearing payments from customers from one account to another, from one bank to another, and so, if you like, the company ended up playing a cat and mouse game with the banks, opening up accounts with different banks when its previous accounts were shut down, and then once the bank realised what was going on, acquiring other companies which already had existing banking facilities, and then opening new accounts in the names of those companies, but also they got shut down. So there's an ongoing cycle of closure of these accounts, which operated as a red flag, not only to the banks themselves, but also to others in the industry, including the FCA, trading standards, and also the media.
So banks and FCA and other organisations still got an important role to play in terms of being aware of these risks in the future.
Indeed, and so there should now be a far greater awareness amongst the banks of the risks of accounts being opened with them being used to launder the proceeds of selling commodities as potential investments, and the various red flags or indicators of that type of activity on their accounts. And
Andrew, I would like to ask you a lot more about that, but I'm conscious of the time, and also that we have some questions. And I wonder if Lewis, this is definitely a question for you. And one question concerns soil carbon projects, and they're developing their own methodologies and running their own registries, and their credits go for a price premium. Is there a risk of fraud in those cases? But that's question number one.
Yeah, and certainly the more issuing bodies there are, the more risk there is for fraud. There's 2 points there. One is that it adds layers of confusion, and confusion is bad in situations like this. And secondly, there is a legitimacy question. If a new methodology and a new registry, a new standard system is being set up, it begs the question, why couldn't they persuade the existing standard systems to take on their new methodology and issue carbon credits to the project? So there's a risk also that the process is not legitimate. It's a real problem, and one that the carbon markets are complicated enough. If you create a host of new standards and issuing bodies, it just adds another layer of complexity and danger of more opacity with its subsequent risk of fraud advanced also.
And Lewis, another question. A lot of voluntary carbon market projects also claim co-benefits, such as biodiversity or social. Yet these attributes are harder to measure, but command a premium. Given the emotional pull on buyers, isn't this also susceptible to fraud?
Yeah, it's a good point. It's not just about the number of carbon credits that any given project is able to produce. You could slip a backhander to your verifier in theory and get them to verify a larger number of carbon credits, but you could do the same thing for these co-benefits. But the established standards, I keep coming back to Verra and the gold standard, and that's for a good reason, because they're the largest and best established. They have a system of checks and balances in place for this. I mean, we also, and so that's how you fix that, or you minimize the risk of that particular problem. You mentioned NFTs, Kevin. But actually, NFTs are a child of the blockchain. But blockchain itself can be put to some considerable good use in the voluntary carbon markets. There are a number of efforts underway. One related to asset-backed tokens, but a more comprehensive version would see the birth of a carbon credit in terms of the project making a carbon reduction, all the way through issuance and retirement, could be tracked on a single smart contracts on the blockchain. That would certainly be assistive in terms of the credibility of the market.
So in that way, is there then a possibility that enhanced technology will actually add transparency and verifiability to the system?
Yes, I think that's possible, and likely, in fact.
Louise, there's another question, and it's a really good one, is how can we be certain that the projects certified by the main registries, so Verra, Gold Standard, etc., have gone through sufficient diligence and are not themselves fraudulent?
Yes.
Going back to the projects.
And you could level the same question at the clean development mechanism that was set up by the United Nations Framework Convention on Climate Change. How can you be sure they haven't done it? And that's that assurance process relies on the transparency of the process, relies on the appointment of independent experts to do validation and verification. So in the end, and there's the clean development mechanism under the auspices of the UNFCCC did a pretty good job of that, and they actually created the, if you like, the rule book for the voluntary carbon standards to follow. And in large part, that's what they did. We've got to bear in mind that these are not-profit companies, so that's also already a helpful feature of those particular bodies. To be certain, they would have to undergo a regular audit and independent audit of their own activities, and I assume they do actually. And I can't say with certainty that happens, because it's not something I've had cause to question in the past. So I think the answer to that is multifaceted. Getting assurance that something is true. In this case, requires or is certainly satisfies me if I'm getting a number of independent sources telling me that something is correct. And being in the markets, I if you ever meet the people that work at Gold Standard and Vera, you can. You could be almost instantly satisfied that what they're trying to do is the right thing.
Right. Well, that is good to hear. And just really last question for me actually is, bearing in mind how large these carbon credit markets already are, and given that how important confidence is in those markets, just how important is it to make sure that there isn't fraud or risks of fraud within the carbon markets? How important is that going to be going forward?
It's arguable that it is the most important thing that we can think of, because if we are seeking to solve the problem of climate change that runs the risk of the fall of the Roman Empire, as Bojo put it, if that's all done fraudulently, then it's we will pay the ultimate price. A melting planet cannot sustain the population that's currently on it, and it therefore makes it absolutely important that we have confidence in these activities.
Louise, I wanted to ask you a lot more, but we've more than run out of time. Can I thank you, and can I thank Andrew and Danielle as well for the contributions? And can I thank everyone for tuning in and watching this evening? If there are any more questions or queries, please do get in contact either with Lewis at Redshaw Advisors or get in contact with us. And it's an area that we're all going to be quite interested in and focused in for the years to come. And let's hope that there can be greater transparency and better standards within the carbon markets in the years to come. It's clearly a very important thing. So thank you everyone for taking part in the webinar. And can I just say, I think we've got another webinar coming up soon in Chambers on the 25th of November. And I'm told that is going to be within the regulatory team of Chambers, and the usual information will be sent around and also put onto social media as well. But thank you very much for joining in this evening. And Lewis, thank you very much.
Pleasure. Nice to speak to you. Thanks for great questions.